And welcome to Wiser Technology earnings call for the fourth quarter of 2024. We appreciate you taking the time to join us today. My name is Lubomir Yankov. I'm Wiser Investor Relations Director, and I will be your host. Joining us today are Kosta Jordanov, CEO of the company.
Good morning.
Kliment Nachkov, CFO.
Good morning, everyone.
And Dimitar Dimitrov, Wiser CTO.
Hello, everyone.
They will guide us through the presentation, covering brief introduction of Wiser, business, financial, and corporate highlights, technology priorities, and upcoming corporate events. After the presentation, we'll move on to our Q&A session, where you will be able to ask your questions. Questions should be asked in English, please, either in the Google Meet chat or directly to the participant by raising your hand, and I will give you the word. Now, let's continue with the presentation. Kosta, the floor is yours.
Thank you, Lubo. Good morning, everyone, again. Thank you for joining us today. My name is Kosta Jordanov, and I'm co-founder and CEO of Wiser. Today, after a brief introduction of Wiser, for those of you who join us for the first time, we will cover the business highlights for the past quarter, as well as the financial results. We will also provide guidance for 2025 in terms of expectations for our financial results. With each earnings call, we also take the opportunity to present to you one of the actual other operational aspects of the business. Last time we talked about some of the partnerships and some of the new projects that we are working on. This quarter, we will dedicate a little bit of time to talk about technology and kind of what's our vision and positioning in the technology world. Starting with a brief introduction of Wiser, Wiser is a trustworthy software solution provider. We essentially design and deliver advanced mission-critical solutions for the world's leading organizations. Amongst our clients, you would see companies such as the biggest IT company in Europe, SAP, some of the most innovative organizations such as the European Space Agency, IBM, Indra, Bosch, Airbus, European Defense Fund, and many, many other large organizations that we provide our services to. The mission of Wiser is to empower visionary enterprises to drive positive change through technology. So we are all about technology, and Mitko will talk more about that in the second half of today's presentation. The services that we provide to our clients essentially span across software engineering, machine learning and AI, and digital transformation. We are focused on 4 industries where the majority of kind of our know-how and the majority of our revenue is generated from. This is automotive, financial services, high tech, and aerospace and defense. Generally speaking, these are highly regulated industries that truly appreciate reliability, quality, scalability, and these are some of the factors that we take into account as we continue to build our service offering and our engineering competences. Our value proposition to our customers is around 3 key pillars. Number 1 is technology innovation. So it's about us truly understanding the technology trends and being able to properly apply them to deliver value to apply the latest technologies to deliver value to our customers. Number 2 is it's about domain or industry expertise. That's about knowing the industry of our customers and being able to truly understand their needs and deliver a solution that meets those needs. This is one of the reasons why, as a strategic decision, we are focused on a few industries. This allows us to build this kind of deep industry expertise that then allows us to deliver more value to our customers. And last but not least, it's engineering excellence. It's exactly about those factors such as quality, reliability, scalability of the solutions that we deliver. Working with a lot of Fortune 500 companies, it's really critical that the solutions we deliver are able to scale and to meet the really high level requirements in terms of reliability and availability. Our team consists of about 550 top software engineers, scientists. We have a lot of PhDs and IT consultants. The delivery capacity is based out of Bulgaria and Serbia primarily. We do have a team in Greece as well. The company is headquartered in Bulgaria, listed on the premium segment of the Bulgarian Stock Exchange. We have offices in 3 cities in Bulgaria, as well as in Niš in Serbia. And then we have 2 smaller, more of a kind of sales office operations in New York and from last quarter actually, in Frankfurt as well. Some financial highlights for 2024. First, this was another quarter of pretty rapid revenue growth, and Kliment will talk much more about that and provide you also the kind of the historical trends and give you a little bit more insight into what percentage growth that is. We did 8.7 million euros in revenue in the fourth quarter alone. For the full 2024, our official revenues are 20.5 million euros. If we, on a pro forma consolidated basis, which means essentially with all of the companies that were acquired throughout the year, if we count their revenues from January 1st, the revenue of the company for 2024 was 33.3 million euros, which is a very, very significant jump, actually quite untypical for a service company compared to the year before. Looking at the gross margins, we are relatively close to the industry benchmarks. We compare ourselves with 3 groups of peers. The first one is what we call global peers. So these are the large global IT service companies, probably the least relevant of the 3 groups. Number 2 is local peers, which are East European IT service companies listed on East European stock markets. And both of those have, for the fourth quarter of last year, have a gross margin of 31%. We are 26%. And the third group is IT service companies listed on the Frankfurt Stock Exchange. And there you could see significantly lower gross margins, probably a reflection of some of the trends that are happening in Europe and so on, the slowdown we're seeing. In terms of EBITDA, Q4 is slightly positive, and the whole year is slightly positive. Nothing exciting. The major reason for this is the significant investments in growth way beyond the industry benchmarks. Back in 2023, we announced a 3-step strategy, and the focus for 2024, and actually at that time for 2025 as well. But we'll talk more about how 2025 is shifting. So the focus back then was for 2024 to grow as quickly as possible, as long as we stay EBITDA positive, and this is exactly what we delivered last year. Speaking of shifting focus this year, we grew last year actually faster than we projected, and we hit our kind of first targets in terms of first milestone in terms of size. So 2025 will actually be split between more or less 2 modes of operation. The first one would be essentially continue to grow and integrate the businesses and kind of prepare this platform for the future. And in the second half of the year, we'll be shifting towards a more balanced approach between growth and operational efficiency. And Kliment will talk more about what you should expect in 2025 from Wiser. We also in the fourth quarter of last year, including through one additional acquisition that we did in 2020 in the last quarter, which was the acquisition of the Serbian company Badinsoft. We continue to expand our client base and continue to diversify our client base. And Kliment will show you some breakdowns of the revenues across different industries, currencies, types of customers, and so on. A few corporate highlights from the past quarter. I already mentioned the acquisition of Badinsoft. It's a company with about 100 people, very kind of blue chip customers, including BlackRock, including Raiffeisen, including Telekom Serbia. The company is focused in two areas, and kind of the vast majority of the business actually is in the financial sector. So for the Wiser strategy, this acquisition also adds a lot in terms of additional competence and experience and relationships in that world, which is one of the four industries that we are focused to serve. In the last quarter, we also completed a capital increase of 12.3 million euros, which we started, I believe, in September and was completed in Q4. We changed our auditor to a globally recognized name, Baker Tilly, top 10 in the world, top 5 in Germany. This is in preparation for further European expansion, access to European investors, and so on. So we kind of wanted to check this check mark as well. We also did a first step of changing the board composition. So two people who are the key people from two of the companies that we acquired throughout the year. This is Prime and Digital Lights joined our board. We also appointed a new, I believe, more balanced audit committee last year with kind of more external presence. We launched a capital increase for Wiser employees, which was completed earlier this year with 293 participants. I actually believe today is the first day that the new stock is being traded on the Bulgarian Stock Exchange. We rolled out in Q4. We also did an update to our employee stock option program, and for the first time, roll out the program to a larger audience. So we have kind of the initial grants, which were done late December. There are 112 participants, so about 20% of the employees that were selected by the management for their contribution and past and potential future to the company. By not including everyone, this was a hard decision to make, but we wanted also the packages to be meaningful in terms of size. So we decided to essentially include about 20% of the team, but make sure the packages are more sizable. Based on our calculations, given that we are now meeting all of the requirements for inclusion in the SOFIX index, based on our calculations, we expect to enter the index later this month when the rebalancing happens. We also, at the end of Q4, the new board approved the 2025 budget. This was actually great integration exercise as well, because it's the first time all of the companies kind of integrated and worked as one team as we should, and we did the kind of whole planning on a one single Wiser level. We expect to do 38 million in revenue, about 10 million in gross profit, and about 2.3 million EBITDA. This excludes any further M&A activities throughout the year. Speaking of corporate highlights, probably 2 earnings calls ago, we showed you a very similar chart, essentially what is the current structure of the group and what is our future structure. So just wanted to take the opportunity to give you a little bit of update. So the first change you would see is that we acquired 100% of B&R Inc. This is our operation in the US. Part of the strategy is to consolidate completely the ownership so that Wiser Technology owns all of the subsidiaries and then starts to consolidate them to a much kind of smaller number of entities. Another change is the addition of Badinsoft in Q4 last year. 3 of the companies are already in the process of merging into Wiser Technology Solutions. These are Databrief, GoToAdmins, and ITDO. This process will be completed by the end of April. So this will already start to simplify the structure a lot, and obviously, as such, simplify management and lead to optimized operations. The next steps moving forward, towards the mid of the year, we'll also merge Digital Lights into Wiser Technology Solutions. And in the second half of the year, we'll merge Prime into Wiser Technology Solutions. And we'll also merge the 2 entities we have in Serbia, which is Badinsoft and Prime Software Serbia, into one entity. And we'll end up with the structure that you would see on the right-hand side of the slide. Essentially, all of the operations will happen in Wiser Technology Solutions. And this entity will have several subsidiaries where in the different jurisdictions. So one in Serbia, so Badin will be renamed to Wiser Technology Serbia. One in the US, BNR Inc. will be renamed to Wiser Technology US. And we're now in the process, already started the process of establishing 2 more legal entities, one in the UAE and one in Germany. We already have small operation in Germany, and actually a small operation in UAE as well. And now we want to make it more official and kind of have proper legal structure, proper offices, so that we continue to hire and expand our local teams. And this is part of our kind of growth investments that we're doing this year. Upcoming events on the corporate front, we have a general assembly scheduled for tomorrow. There's one major topic on the agenda, and this is the appointment of new board members, with the objective to bring additional business experience, a stronger international angle and perspective, and expanded business network, both in terms of supporting the business, but also in supporting some of the corporate development activities, including attracting foreign investors, potentially, when the time is right, dual listings to a foreign stock exchange. So this is kind of a step in that direction. Very briefly about the 3 new candidates for our board, and for those of you who will join us tomorrow, we'll provide much more context, and you'll have the opportunity to we'll ask them to present themselves online, since everybody's traveling. So the first one, proposed new board member is Thorsten Wegener. He has entrepreneurial experience in the IT services sector, started 2 companies, built a second company to over 1,000 people, sold the company to Cognizant, one of the global leaders in our space, ran Cognizant for a period of time, Cognizant Germany. So has a lot of experience of building, scaling IT service businesses and operating across Europe. He is a former member of the largest IT service company in Germany, listed on Xetra, Adesso, and current member of the supervisory board of another German public IT service company, Exasol. So he also brings a lot of experience from the kind of board level experience from top IT service companies in Europe. And during his tenure at Adesso, the company actually grew from about $500 million in revenue to over $1 billion in revenue. So these were 3 very exciting years, and we hope this experience will be quite relevant to what we're trying to do here with Wiser. The second candidate is Ivanka Visnic. She's a professor of the Sada Business School in Barcelona. Also heads the operations, innovation, and data science department at the university. She has a lot of understanding of a much kind of wider data set of companies. And she's very kind of often has articles in the top magazines such as Harvard Business Review, MIT Sloan. She consults major companies, including IT companies. So she brings this kind of wider view across larger set of companies, of what works in terms of how to properly structure innovation, how to properly do organizational design, and plus obviously her experience in the innovation data science fields, both of which are, and Mitch will talk more about that, on the crossroads of what we're trying to do with Wiser. And last but not least, it's Ivailo Slavov, who founded and led the biggest IT service company in Bulgaria, built the company to about 1,300 people, went through a number of mergers, did a merger with a German company as the last step of the process. So in a way, he has done something similar from our part of the world, and his experience is also very relevant to what we're trying to build. Before that, he held diverse management positions in some of the top IT service companies in the world. Also member of the Bulgarian-German Chamber of Industry and Commerce. All 3 of them are actually, we have been working with them for several months already. and we are already kind of have very strong relationship, and we already see a lot of value from what I bring on the table. So that's kind of the key focus for tomorrow's board meeting. And also to accommodate those proposed new appointments, there is a topic about updating the remuneration policy. And with that, I would like to hand it over to Mitko to cover our technology vision and priorities.
Thank you very much, Kosta. Hello, everyone. I'm really happy to share our technology priorities for the current year. And as a start, let's take a second and reflect on the general technology trends that we see happening around all of us. So we're living basically in an AI revolution, which changes our complete reality from both personal as well as business perspectives. And these days, there is no company, there is no strategy of a company which shall not consider the adoption and use of AI technologies. And what we've seen already last year is that this is actually taking place in many of our customers' activities. And I have to say that our complete team, and this is not just the technology team, but this is also, if you look at it from finance, operation, HR perspectives, we as Wiser are quite thrilled to live exactly in this AI era, if I could say it like that. McKinsey defines a top 15 technology trends. Of course, many of them are related to AI and machine learning, but we also see a future of mobility, cloud, edge computing, future of space, robotics, and few others. And our team, having decades of understanding from embedded software development up to cloud native solutions, big data, and that backed up with a solid computer science, math, semantics, data management skills, I believe this really allows us to keep our way ahead stable. And I have to say that I'm quite happy, if you look at last year, to observe that basically being well positioned towards those trends, more than 50% of our work, revenue, and team engagement actually relate to some of those key technology trends. What's more, we're doing this for customers like Q4'24, IAV, SAP, BlackRock, Nestlé, and other top companies, which we help them live this whole AI transitioning that is currently ongoing. And that, I have to say, brings us, Wiser, as a team in a reasonably advantageous position that we have already the solid foundation to embark on a way higher ambition journey. And if we can go on the next slide. So, and that's as part of that journey for today, we wanted to share with you basically how our current superpower basically looks like from technology perspective. And let me start with basically with our team. So we are knowledgeable, we're humble, and we're curious and learning every day. So last year and this, we do our best to retain and attract really top talents, engineers who are capable to build complex solution with highest quality and up to the this new reality expectation. And very quickly, let me give you a few marks related to this top team, and I hope they will resonate well with you. So in Q4 alone, we screened more than 1,000 CVs. We have conducted 300 plus interviews, and we hired the top 10 people out of that effort. Nobody as a key person from the company left last year. So these are some of the reflections when we come to building and evolving a top team. Now, on top of that, what we do is the following. When it comes to an infrastructure level. So this is, you could think of it as an on-prem solutions and infrastructures hybrid and cloud ones. So we are a gold partner of Microsoft. We are a top partner of AWS, Google. We're starting partnering with NVIDIA, Fujitsu, and we are actually a gold partner when it comes to SAP, strengthening further and further our actually partnerships with them and becoming more and more strategic. So end of last year, we signed an OEM agreement with SAP, and very few companies actually have that level of strategic partnering with SAP. This allows us to understand in and out the infrastructures which serve all the software solutions on top. After that, when it comes to the data and data management, data models understanding, we also possess a fairly reasonable understanding and knowledge of how that data looks like, a massive amounts of data. And this is also something that we do in the context of SAP and Salesforce, as well as custom solutions. On top of the infrastructure and data knowledge, we have the layer of line of businesses. And any company is formed by a number of line of businesses like HR, procurement, sales, logistics, and so on. At Wiser, we possess world-class knowledge related to some of the line of businesses like HR, commerce, procurement, and sales. And by saying line of business, you should know that this is a technology understanding, but also business processes understanding, because behind any line of business, you have actually the key end-to-end processes forming a given company: hire to retire, order to cash, procure to pay. So, and this is where many of the data points are actually being generated. So we have the infrastructure, we have the data, we have the processes in the context of line of businesses. And the next layer of knowledge that we have is actually the industry, which comes with its specific domain understanding. And like Kosta said earlier, we have the strategic industries priorities related to mobility, high-tech, banking, and space and defense. And we do have a vertical understanding of those industries. As an example, we have not just a top software engineers, we have people who understand well the architecture of a given vehicle. And just to illustrate what I mean, and more you'll see later, we are further expanding our capabilities along those priority industries. Having also the industries and all the specific content related to that, the next layer, technological layer of our portfolio is actually the AI and machine learning. And what we do is we try to make sense and to add intelligence all over for everything we do for our clients. So, and this is basically allowing us to not just deliver, the automation and the cool applications, but actually add intelligence and make them smarter through our understanding of models, algorithms, tools, and platforms. Let me outline that many these days are going and creating their own models. What we do is we focus on understanding the best models, the evolution of those models, and enabling them for our clients, complemented by complete and turnkey AI solutions and use cases, which enable the adoption on our customers way easier. And this is actually turning us to an AI technology enabler for our clients. And what we do is, for them, we're offering and we're implementing an end-to-end AI transformations. And this we do, again, with the whole tool sets that we have, with the knowledge of the platforms, with the AI tools, with the AI data management. We add to that the understanding of the industries and line of businesses with all the specifics related to the data models and scenarios and processes. And this is actually backed up by our top engineering teams, who are top coders, and now they become brilliant in AI from the perspective of enabling intelligence for the clients, but also becoming brutally productive by adopting AI for our own development purposes. And if we go to the next slide, this leads us to the priorities we wanted to share with you for the current year, where the first thing is it's team focused, and we're, as earlier said, working on completing the integration of our teams, keep the innovation running, and becoming way more efficient adopting AI. The second priority is infrastructure and data partnerships. I mentioned earlier Microsoft, AWS, and the others. Let me give you an example with Microsoft. So yes, we do understand in a brilliant way Azure and the Microsoft infrastructure services. At the same time, we're currently starting to prepare a joint technology place together with Microsoft. This is a completely net new business for us. So turning into a gold partner with Microsoft, we are jointly positioning to the market AI innovations together with them. And this is something that we will talk more in our next earnings call. But this is just illustrating that with those partnerships, and these are the most innovative and changing the world technology companies. So we are strengthening our partnering and joint go-to-market plans together with them. We are deepening our industries and line of business knowledge, getting better and better in all this. And next time we talk, I will be happy to announce a very important and pretty cool eventual new project with European Space Agency, which should be something also, important not just for Wiser, but also for Bulgaria, if you look at it. And the third element is we'll be focusing on our AI transformations. From one side, adopting and leveraging it better and better every day internally for productivity purposes, but also working on end-to-end AI transformations for basically from our clients. And next year, we expect that actually perhaps half of our implementations will be related to that. And let me conclude by saying that on top of this understanding of ours and work, we related to our really high aspirations. We are also researching about autonomousness, robotics, and quantum. And we're researching not just from reading papers, but we're actively thinking what would that mean for our clients when it comes to new solutions, but also when it comes to compliance, when it comes to ethics, when it comes to actually all the processes and certifications required in order one team like ours to implement those solutions. That was it in short, and thank you very much. Looking forward to the last part.
Thank you, Mitko. Now we'll go over to the key financials that we reported in the last quarter of 2024. As Kosta mentioned, the Q4 revenues of 2024 are about 8.7 million euro. This is a very significant growth compared to the same period in 2023, of almost 5 times. Of course, this is due to the acquisitions and the new companies which joined the group with Prime and Digital Lights early in the year, and with Badinsoft from Serbia in the last quarter. And this you see the trends, the first phase of our development, gaining volume and increasing. It started in Q4 2023 with about 200% growth, and then even further accelerated in 2024, resulting in this almost 5 times growth of revenue in Q4 2024. In terms of EBITDA, the quarter is at break-even, slightly positive, which is still, it's not impressive, but it's still a good result considering all the dynamics that happened in the year, and especially in the last quarter with the integration of the newly joined companies and with the completion of the Badin deal. If we can go to the next slide, please. In terms of overall performance of 2024, on a pro forma consolidated basis, as Kosta mentioned, assuming that all companies were together throughout the entire 2024, we have a revenues of about 33.3 million pro forma consolidated revenues and a EBITDA of 1.1 million, which is about 3.4% of a margin. In terms of reported revenue, we are at 20.4 million euro. Again, this reflects the companies, the results of the companies after they joined the group and after the completion of the transactions. This represents a more than 300% growth compared to 2023. In terms of EBITDA, we are slightly positive again, 268,000 euro, 1% margin, which is still okay, considered again the dynamics of the year, all the transactions, M&A transactions and associated costs, and the beginning of the integration process. In addition, we started in H2 2024, we started investing in our future. We hired new seasoned, experienced professionals in our sales team, some of them based abroad, close to the markets of our clients. And we also started investing in common infrastructure of what will help us integrate and become one company. This, of course, is a investment for the future, and we are likely to see the results in H2 this year and beyond in 2026. In terms of revenue breakdowns for the year on pro forma consolidated basis, as Kosta and Mitko mentioned, by industry, the largest portion of our revenue comes from high tech at 46%. Then we have the automotive industry with 17%. We have financial services with 13%, which is higher compared to the previously reported number due to the addition of Badin-Soft, which have a very, very good positioning in this sector. Then we have communications with 4% and aerospace and defense with 2% of our revenues. In terms of geography, 32% of our revenues come from North America, 27% come from the European Union, excluding Bulgaria, 13% come from Bulgaria or subsidiaries of international companies located in Bulgaria. 12% come from non-EU countries. These are Switzerland mostly and some UK. And we have Middle East with 14% of our revenues, and this trend is expected to continue, and this share is expected to increase in 2025. In terms of revenue by currency, of course, no surprise, most of our revenues, more than 50%, are in euro. We have about 26% in US dollars, 16% in leva, and now we have about 6% in Serbian dinars. This is, of course, again, as a result of the acquisition of Badin-Soft. In terms of our balance sheet highlights, we are still in a very good position. Overall assets are about 40 million euro. The majority of this is in goodwill due to the acquisitions that we completed in 2024 and some in 2023. We have the investment in Triller at 922,000 euro at the end of the year, and this actually reflects the actual share price as reported as traded on Nasdaq at the end of the year. The value of the investment has declined due to internal company and industry dynamics. Our cash position, though, is very well, a very good place. We are at more than 6 million euro at the end of the year due to the successful fundraising rounds in 2024. In terms of liabilities, bank and financial liabilities increased due to the addition of the new companies and their debt reported on consolidated basis. We also have some related party liabilities, which is mostly due to the equity portion of the Badin transaction, which is supposed to be finalized this year through the next capital increase. As Kosta mentioned, we had a very interesting and extensive exercise of putting together our budget and our expectations for 2025. This was a very, very good exercise in terms of integration and getting ready to operate as truly one company. We expect in 2025 to make about 38 million euro in revenues, which will represent 85% of reported year-over-year growth and about 14% of organic growth. In Q1, we expect to make about 8.2 million euro. In terms of profitability, our goal is to hit EBITDA of 2.3 million, which will represent about 6% margin. And this is despite the still continuing integration efforts and investments, as we said, in the future, to expanding and improving our sales team and building the common Wiser infrastructure. Of course, this pressure on margins will be offset by expected improved contribution project margins. The projects in our pipeline are with significantly higher contribution margin compared to what we have in the backlog as legacy. So this will help us improve there. And we also would like to and will improve our utilization of our income-generating engineers, which will help us improve the margins and the overall results. This is, of course, a process, and we expect most of the improvements and the optimizations to be effective in H2 this year, as well as the organic growth due to the sales cycle of the people in our team, which in this industry, it usually takes about a year, even a year and a half. With this, we would like to conclude the presentation, and I'll turn over to Lubo and Kosta for some closing remarks. Thank you.
Thank you, everyone, for the detailed information. Now, closing remarks from Kosta, and after that, Q&A session. Kosta?
Thank you, Lubo. Thank you, Mitko and Klimo. Just based on what Mitko shared, I wanted to kind of give you our perspective and how we think internally about how the industry is changing. Because obviously, AI is a huge disruptor, a huge opportunity. And it's not only affecting the software services industry, it's actually affecting the industries of all of our customers. So this is a big change that is already happening, and it's happening super fast. So our expectations are that the demand for IT services will only increase because all of the businesses will only need more and more solutions and services to properly manage their data, to kind of understand their data, to take the kind of right insights to manage their businesses. So on the demand front, we do expect actually acceleration in the sense of more projects will be realized in the coming years than ever before. More code will be written than ever before. However, the programmer's job is changing, and it's changing in a significant way. A lot of the things that programmers used to do yesterday, such as writing code and bug fixing, is evolving, and it's being automated, and it's being done by AI. So the programmer's job is more shifting towards the other important aspect of delivering a service solution, which is kind of, in this case, it will be also including guiding the AI, product requirements, communication with stakeholders to kind of align requirements. It will be code reviews on AI-generated code to make sure it's safe and secure and meets the requirements. It will be about these kind of more consulting aspects of building a software product. And we already use a lot of tools internally to kind of boost our productivity, and already a good chunk of the code that is being generated by Wiser is generated by AI. And we continue to evolve as a company to be at the forefront of what's happening in terms of this revolution. And as we continue to see kind of improved productivity, we also expect to see business models changing down the road. This kind of drastic improvement in productivity when it comes to writing, essentially to providing software solutions, writing code and delivering solutions, means that with the same effort in terms of time spent, we'll be able to generate much more value for our customers, thanks to this increased productivity. And when we talk about increased productivity, actually, writing code is one of those things that are particularly suitable for AI automation, because it's a very logical thing, structured thing. It's actually easier than human language. And from that perspective, it's probably happening. This is one of the areas where kind of AI is happening the fastest. If you look at our revenues today, we have two business models. One is what we call time and material. Essentially, it's a consulting business, and we charge by the hour, same as management consultants. And the other one is fixed price. So we charge for a particular solution. So we do the specifications, and we quote a price, and we charge that particular price regardless of how much effort we put into that. Today, the split is roughly 70-30 between time and material and fixed price. As we kind of continue to become better and better and more productive in terms of delivering solutions, the first aspect of that is continuing to shift towards fixed price projects, because this means that with less effort, we'll be able to deliver more value and kind of charge properly. And if you look at the more extreme case, maybe a few years down the road, would be towards value-based pricing. So imagine that we work with a big international customer, and we improve their sales conversion rates by 2%. This might result in, through the application of AI and our experience in the industry. So this would result in, let's say, maybe hundreds of millions of additional revenue. And we could do then pricing based on the actual additional business we generated for them, or on the cost saving side, the cost that we saved. My point is that business models are also shifting. And this is also down the road, we also see this as potentially decoupling, even for service businesses, a number of people from revenues. And essentially, as long as those people could deliver way more value, they will be able to deliver also way more revenues per person. It's almost like some service companies, the ones that are flexible and kind of and dynamic and forefront, might also transition to something almost similar to a product company. So we see large upcoming changes in both operations of how an IT service company is run, how our customers' businesses are run, and how IT service business models are evolving. There is a real, because with every big revolution, there's a chance for new players to emerge. We believe we're very well set to emerge as a European leader in that space. We have a very, very strong team and probably the proper size, in the sense that much larger and much bigger organizations have more inertia. It's a little bit harder for them to reinvent themselves and to align their business with all of the new stuff that's happening. And much smaller businesses probably don't have the critical mass. So we're on a good spot, and we have a strong team. I think we could take good advantage of this revolution and emerge as a leader in Europe.
And we are moving to a Q&A session. We already have some questions. Let me read the first one. Thanks for the presentation. It's from Anonymous. I believe the previous target for EBITDA margin was 10 to 50%, and now we see guidance for 6% EBITDA margin for 2025. How do you see the EBITDA margin improving in 2025, 2026?
I believe I had to look at the slides. I believe the guidance was 10 to 15% in 26. The guidance that we provided since 2023. We still think that this is achievable, and this is still the target. This year is a little bit of a transition between this high growth mode and this integration mode. Just to give a sense what we mean by integration, we still have 10 different companies with 10 different independent administrative teams. This includes finance, operations, and everything else. And before we finalize this consolidation, and before we slow down a little bit on investments in terms of new sales offices, new sales operations, we will not see major improvements. The numbers 10 to 15 is where we need to be, given kind of the industry benchmarks. And this is where we think we will be 2026. This year, assuming we execute well on our plan, and assuming kind of no major kind of external impacts, we should be able to demonstrate the trend towards these targets.
Okay, thank you. Next question from Georgi Raikov. There's a few from him. Do you expect a marked acceleration of aerospace and defense revenue in light of the recently announced significant boost of EU defense budget? What kind of timeline do you envision?
Mitko, you want to take this one?
Yes. So I've already kind of hinted that when it comes to space, we expect 2025 to look very different compared to last year in terms of projects and revenue. And this is despite the fact that the Bulgarian standing in ESA is still a cooperative member state, and we're fairly restricted to work on European Space Agency projects. However, as WISER, we are also in active conversations with our governmental representatives, keep explaining the importance of Bulgaria becoming an associated or full member state of ESA, which will unlock way more potential for teams like ours to work on space-related projects. At the same time, space is a topic that we expect, and we, as said, I hope already on the next earnings calls, we will be surprising you quite positively. Now, when it comes to defense, WISER is from the very few software companies in the region who has a solid foundation of defense knowledge and experience and references. And in the context of defense and building solutions which are protecting lives, we are actively working with a good number of partners of extending our business. This is what we can say. All the current geopolitical and technological trends lead to an enormously big possibility in front of us. Our partners with whom we work, even if you want from automotive sector in Germany, we are currently preparing a joint defense tech place together with them. We are turning also capabilities and experience from other industries and orienting them towards that. So the potential is there, and we are in a reasonable good position to contribute to that on European level.
Maybe just to add to that, before the kind of the last year's round of acquisitions, space and defense was driving almost close to 10% of the revenue, getting closer to 10% of the revenue. Now it's significantly less because of the acquisitions and most of the other companies having less exposure to defense. It's not because the revenue is growing, is declining in absolute numbers, but in terms of percentages, it dropped to about 2-3% as of last quarter. We do expect that this is one of the areas where we'll see the fastest growth. Again, it's, as Mitko said, very unique positioning. Maybe one of 30 companies in the IT services space have even the experience and the references and the certificates to be able to work in that space, let alone the relationships through the number of projects that we did with the European Defense Fund. We are in direct collaboration with all of the major leaders in Europe. So we do expect over the coming years, with proper execution from our team, to be able to take advantage of the much expanded budgets in Europe.
Thank you, Kosta. Second question from Georgi. The 2025 budget numbers seem somewhat soft compared to previous communication. I were guiding CA euro 29 million pro forma consolidated revenue in September before the acquisition of Badinsoft, which generated around 7.2 million revenue in 2023. The updated pro forma consolidated revenue from the co stands at 33 million. It appears that Badinsoft sales have decreased to 4 million in 2024. Could you bring some more color to the factors behind this significant revenue drop of the newly acquired business in Serbia?
This is absolutely correct. Actually, but in 2024 revenues are significantly lower than 2023. So this analysis is properly done. It was mainly due to losing their top customer, USG, before the transaction. This allowed us also to have a very favorable terms on the transaction because this was already taken into account. Compared to previous guidance, we did communicate that the target for 2025 is 15% revenue growth. If you look at the budget, it's 14, essentially, because we expect a little bit less last year in terms of revenue. So we kind of stay very, very close to the original projections for 2025. Again, the year is in front of us. This is excluding any additional M&A activities.
Just to add to what Kosta said, if I may, the situation with Badin is as Georgi properly analyzed and it's actually a very good question. They, as Kosta mentioned, Badin lost their largest client last year, and they went through a very, very bad M&A transaction with their previous owners before Wiser. And this was actually a very good opportunity for us to acquire a company at a very favorable terms, a solid company with good positioning in finance and banking, which is one of our key sectors, good team, eager to actually change ownership and join fresh start in a larger project like Wiser. There's a decline in revenue, but that was an opportunity for us, and we seized it.
Next question from Georgi. What are the revenue growth expectations in terms of region and verticals?
In terms of regions, as we have communicated and based on what our pipeline shows, we plan the majority of the growth to come from the Middle East, with a lot of good opportunities there and a lot of good budgets in place for IT transformation. Still, we are very active in our traditional markets, the US and Western Europe, where we also expect new projects to come along, especially with the larger size that we are and the more capabilities that we have across the companies that joined. In terms of verticals, it was mentioned the overall effect of AI across all industries. So we expect it's there. The demand is there within the traditional industries that we operate, and we believe that we can pretty much grow across all of them in 2025.
Thank you. Next question. Dimitar mentioned the impact of AI on productivity of your own software engineers. Do you have some estimates in terms of observed or potential margin boosts?
This is yet to observe when it comes to concrete margins. But as you see, we are for 2025 and 2026, we are continuously increasing the expectations of our profit margins, and this is also considering the AI technological advancements and becoming better and better into leveraging this. So what I could say is that if you purely looking at it from industry level, and like Kosta said, the positive effect of AI when it comes to software development, if 1 year ago you would make a study of development team leveraging AI instruments for supporting the very development process, the effect you might have would be perhaps to 30 to 40% of productivity boost for specific types of projects. So what we expect to see over the course of the current year is that we will have projects where the effect of leveraging and mastering usage of AI would actually go to, 100, 200, or 300 times better productivities in some cases. So this is something that we are preparing, learning, and this is and enabling that knowledge to our clients. And this is the big opportunity to us to pursue this really high ambition of becoming one of the top European software players.
Thank you, Mitko.
Maybe just to add to that, today about 70% of our revenues come on a time and material business model, which means essentially that all of the additional productivity we transfer to our clients, because we still charge by the hour, and even though we produce much more code, much more high quality code, we use AI for testing and all of that. All of the value in 70% of the cases is transferred to our clients. So one of the things that need to happen for us to capture some of this additional productivity is actually to continue shifting towards fixed price projects, and maybe down the road even to value-based projects.
Thank you, Kosta. A few questions from Velizar Furwansky. The first one, significant part of revenues are coming from US. What implication, if any, can we expect from more defensive national policy by the Trump administration? Do you think such policy can affect negative IT business?
For now, as far as we know, they're not considering taxation tariffs on services. So they're talking only about products. However, obviously the trend is towards deglobalization. And it is possible that we see, I don't know, even some tariffs on services later this year. If this happens, it will obviously impact the competitiveness of all of the European and East European companies across the ocean. One of the good things that happened throughout the process of kind of merging several companies and this fast growth that you've seen over the past 2 years is that we have a relatively diversified client base between Europe, US, and now the Middle East. We have relatively diversified client base between different industries. And again, I could give the example with automotive on one end of the spectrum when it comes to kind of the energy in the European automotive space, and defense on the other hand, where we see huge growth. So we feel we have a relatively diversified portfolio from both geography and industry perspective, but obviously it's not protected by any of those global trends. And if potential tariffs are introduced on services, this will become a challenge to continue to grow our revenues from the US. All of that said, as we continue to grow our positioning and our value proposition, we are still relatively, actually quite low in terms of the rates that we charge. If you compare us to any, let's say, West European company, we are half of their rates. So there's a lot of room for actually, even with tariffs and even tariffs aside, as we continue to improve our positioning and references and relationships, there's a lot of upside on the rates that could potentially offset some of the macroeconomical and geopolitical things that are happening.
Thanks, Kosta. Next one. What exactly happened with the employee share ownership plan? Meaning the fact that only about half of the shares were subscribed is kind of strange for me, given the fact it was free money for employees.
The capital increase was with up to 160,000 shares, roughly speaking. 92,000, I believe, were subscribed earlier this year, which is more than a half, but it's far from 100%. It's multiple factors, including some complexities for our employees outside of Bulgaria.
Thank you.
And we have a team of about close to 150 people are located outside of Bulgaria.
Okay, thanks. Another one from Velizar. Is all the guidance you provide is ex M&A? Is that right? And are you planning some new M&A transactions for the next year?
Indeed, this is the organic growth guidance, so it does not include the effects of any additional M&A throughout the year. For the first half of the year, we will remain focused on the integration process. We still have a lot of work to do there. I believe the most critical aspects are behind us, but the ones who would actually deliver most of the results are in front of us. So the focus will be there. It's not impossible that we become more active on the M&A side as well in the second half of the year, which will probably mean transaction early next year, the earliest. We are also, in terms of M&A, you should expect to see a change in the strategy. So we will not be looking for further M&A in our region and to grow our capacity further. We'll be looking for M&A in our target markets, so that we have the local presence, we have the local relationships, and so that we could use this as one of the elements that will help us elevate our positioning and to make sure clients properly understand the value that we bring.
Thank you, Kosta. The next one. Does being the right size mean the acquisitions are now out of question and Wiser will focus on organic growth?
They're not, but they will not be of that size. So we will not be growing 2-3x thanks to M&A in the coming few quarters before we feel super confident that we have done all of the things that we shared with you today in terms of integration, in terms of AI positioning, in terms of full AI tooling, and I'm not talking only about the engineering department. I'm talking about across the company. So once we do all of this job, then we'll be ready for bigger M&A transactions and to assimilate bigger operations. Until then, we might be doing things, but they will be on the smaller scale, and it will be more about strategic positioning in our target markets.
Thank you, Kosta. Next one is from Kosta Jordanov. Could you provide an update on the status of the deal with Prime Holding? Specifically, when do you expect phase 1, 51%, to be completed, and what is the timeline for the remaining 49%?
Phase 1 is completed in the sense of the deal is done. It's fully in cash. Cash has been paid, so ownership has been transferred. So phase 1 is completed. It's behind us. Phase 2 is the acquisition of the remaining 49%, which we plan to do by the mid of this year, based on. So essentially, we aim for the first quarter to finish. Based on the numbers for the past 12 months, we will we have a formula to calculate the valuation, and we will do the acquisition of the remaining 49% towards mid of the year. It will go through a capital increase process again, so that we could also provide Prime original shareholders with the opportunity to acquire stock in Wiser.
Thank you, Kosta. Next one is from Tihomir Kaundjiev. Which companies are referred as global and local peers when you analyze the gross margin?
Just give me a second to open a slide, and I could tell you the names. This is actually a slide from our internal board meetings. So global peers includes Accenture, Capgemini, DXC, IBM, Indra, Infosys, NTT Data, Tata Consulting, and Tech Mahindra and Wipro. Local peers includes Arops in Romania, Attende, Betacom, Boscar, Chromosome, Ericsson, Nikola Tesla, eFirma, Minero, Midrange, SmartLinks, essentially East European companies listed on East European stock exchanges, and a few others. And Frankfurt peers includes the big IT service companies in Frankfurt, including Adesso, including Zenit, Sizigi, Softink AG. Okay.
There is no further questions in the chat. Okay, since there are no further questions, we will be concluding today's presentation. Thank you all for your time and interest, and wishing you all the best.
Thank you very much, and talk to you soon.
Thank you.
Bye. Have a great day.
Bye-bye.